So I'm going to unmute and see if anyone has any questions.
I need a smooth way to transition this because I find it interesting how many people that you sit with on the mortgage protection, they feel like it's not a product they need because they already have life insurance, yet they had life insurance when they wanted to get mortgage protection. So why that mindset? How do I get out of it?
Exactly. You were like fading out, but I think I got the gist of your question. You're talking about how to help people transition from that they already have regular life insurance, right? So it's not just work insurance. Is that your question?
No, I'm finding that they know they have life insurance at work, and then when you start talking about mortgage protection and they come to realize that mortgage protection insurance is also a life insurance.
Yes.
All of a sudden, oh, well, I have life insurance. Well, I want to say, well, if you knew you had life insurance before and you thought you needed mortgage protection, why all of a sudden, just because mortgage protection is in the form of life insurance, that you don't need it? That's my thought, but I know I can't say that.
Were you here at the beginning?
Yeah, but I didn't feel like that.
Okay. So at the beginning of during the bond report process, he goes through a lengthy thing on work insurance, talking about why you need this insurance outside of work insurance. And he goes through that whole paragraph on, did you hear that part? Okay, so how he gets rid of the work insurance, what current life insurance do you have outside of work that you own and control? So that's the question he asks. Then he goes, hey, work coverage is great, Ryan. I'm glad you got some coverage, okay? Here's the problem with work coverage. The reason why the insurance companies don't count work coverage is because at any moment, snap the finger, it can be taken from you, right? You could get laid off, the company could dissolve, right? Lord forbid you retire and lose your benefits. How many times have you seen that? You ever heard of COBRA? Yeah, you know why they call it COBRA, because it will bite you. I love that part. So we want to make sure that you don't get in that situation where you have to have, oh my gosh, now I've got to get the coverage. Can you imagine how much more it'll be at 65, right? And I just wrote a whole life policy on someone who's going to retire in a couple of years, and that was her concern. In 2 years, she's going to run out of coverage, and she needed another, some more coverage. So that handles the work insurance. Now people come, well, I have $250,000 of insurance. It's like, great. Most of our clients have life insurance. Life insurance covers your income. Life insurance covers your income protection. So how much do you make again? You're making about $100,000 a year. So your $250,000 will make sure that your wife can still live at the same lifestyle for the next 2.5 years. Okay, so you do the 2.5 years thing, and then, but this mortgage protection will cover the mortgage. And it's all about framing. You frame life insurance as income protection, right? You frame work insurance as work insurance that they don't own and control. And then what they're doing here is mortgage protection. We're going to make sure that your mortgage is protected. So it's all about being very effective in framing it properly. Does that make sense? Okay. I guess I lost Misty. She must have been in a crazy area. Here's another thing, a way to handle that life insurance thing. If you need to go here, you don't, using that techniques. But here's another way to go with the income protection thing, is they say, well, I have $250,000. Okay. Oh, okay, great. Well, that is, okay. Let me cover this and then I'll cover 250,000. Okay, that's great. So how many kids do you have? Oh, I have 3 kids. Oh, okay. 3 kids. Now, would you like your 3 kids to go to a good college or just a state school or, something good, a good college, okay? And what does a good college cost these days? What is it? 30,000 a year, 40,000 a year? Like Duke, you want to go to Duke University or good college? Say it's 40,000 a year today. Now, how old is your oldest? Your oldest is 10. So in 8 years, you think that 40,000 per year college? Do you think that tuition's gonna go up or it's gonna go down? It's gonna go up. Do you think it could go up to maybe 50,000 a year? 50,000. Okay. So you got 3 kids. So 50,000 times 4 is 200,000. And then times 3 kids, that's 600,000. Huh. So you got 250,000, 600,000 to make sure the kids go to a good college. And so, and then what is your income, Joe? You make 97,000 a year. Okay. So let's say, a lot of insurance websites say that you need to provide your family 5 years to 10 years. Like you have work insurance, right? So work insurance, how many multiples of your income does that's 5 years? Okay, so let's say 5 years here. Now that's basically 500,000 to cover income protection for your family so that they don't lose the lifestyle. So that's 500,000. Okay. Okay, you have 250,000. Huh. Just nod your head and go up and down and you know what I mean? Okay, so that's a way to handle you start spending that insurance money down, okay? Okay, hold on. There's some other questions. There was also another question someone had. I'm going to unmute. I think it was Diane. Someone had another question. Okay. Doesn't sound like any other questions.
Yes.
Go ahead.
Okay. What about a lot of these retirees? Their kids are grown, they're married, or they're off on their own, so they don't have a college scenario. And then when they find out that they've signed for the mortgage protection, of course, and we're going into the final expense because the mortgage protection is going to be so exorbitant, they do come up with this, oh, well, I've got, X amount of private and work, life insurance policy. So they feel like they're blessed because of the cost that it is today. So they're just like trying to shut it down.
Okay, so in the scenario, I'm going to mute because I'm getting noise. Okay, so in a situation where you have a senior client that has life insurance, okay? And so they have life insurance. Well, we have life insurance. We have plenty of life insurance. Oh, okay, great. Okay, life insurance. So let me ask you a question. Most of my clients have life insurance. We're talking here about protecting the mortgage, okay? How much life insurance do you have? And you should have, actually this question should not have come up, at the end. It should come up at the beginning because you're asking on their financial sheet, what else do they have in terms of life insurance? How do you, what else do you have that will offset this need for covering the mortgage? And that is the key question. I think Brand actually uses that question. And then you have them list out. So 100,000, I don't know what it is. And they're 65, 70, 75 years old. Okay, let me explain this. Not many have plenty of insurance, right? The objection is actually in your own mind, thinking that, oh my God, if they're going to bring up that I've got all this insurance, really they don't. They don't have enough. Most people don't have enough, right? And so let's say they do have, look, there are situations where a senior say, well, I already have 500,000 in a whole life. Oh, that's interesting. I'm curious, why did you fill this out if you could pay the mortgage off with that whole life insurance? So I negative reverse the crap out of them to find out, if I still need to be there. And then I transitioned to, okay, so you've got one of those whole life. I'm curious, will that pay in the event you lose in going into long-term care situation where you lose two abilities of two activities of daily living, you know, whatever. Okay, but I don't find it a lot of seniors have enough insurance. And then when they talk about other insurance, I go back again, okay, so, right, so you're taking care of your income protection, right? So you got, I don't run into many seniors, I don't know about you guys out there, I don't run into many seniors that have 100,000 of whole life even. You know, they might have 50,000 term that's gonna end, okay? But even if they have 50,000, okay, that's great, you have 50,000. That's great, that's great income protection. Like how much is your retirement per year? Okay, again, this should have done this early because you know what their income is. So you make, you know, 6,000 a month. So after you die, Joe, you know, you're going to get, your spouse is going to get the greater of which Social Security. So does she also get your pension? Oh, you don't get the survivor benefit on your pension? Wow, that's interesting. So 6,000 a month will go down to what? That's pretty simple to figure out. No pension. Oh, wow. You go from 6,000 to 2,000 a month. Well, that's significant. So Mary, I mean, is it going to be, it's probably going to be pretty simple to, I'm sure you can live on 2,000 a month, right? You negative reverse them. What? Count 2,000 a month? Went from 6,000 to 2,000 a month, huh? So the shortfall is $4,000. The shortfall is 4,000 per month times 12 months. That's 48,000. Wow, 48,000 shortfall, huh? So that 50,000 or 100 or 200,000, huh, that'll last 4 years. Oh, that'll last 5 years. Okay, so after 5 years, your wife still has to make the mortgage payments. So how does that happen? And I shut up. Does that make sense? Everything can be, see, look, you cannot get into everything's just life insurance. Everything's just life insurance. Everything isn't life insurance. Life insurance is a terminology. Okay, so when you frame the terminology of life insurance as income protection, mortgage protection is mortgage protection. But Alex, they can't afford a mortgage protection term policy. Dude, dudette, we're not talking about what the product is. The client doesn't care what the product's called. You don't care what you pull up mortgage term insurance. They don't care about that. They care about you protecting their mortgage. I don't care if it's a final expense or a guaranteed issue whole life. That tool will get them this solution. Never sell on what the product is. Sell on what it will do for them. Man, when you buy a drill, are you buying the drill because, oh, this is a cool drill, it's cordless, man? It's like, no, you buy the hole that it produces. That makes sense. You buy the hole that that drill produces. So whatever the solution is to help them protect their mortgage or help them ease the transition to downsizing, that's what they're buying from you. Okay, so all that life insurance is income protection. This will help them take care of their mortgage. Does that make sense? No kids, older people. Well, I mean, whether they have kids or not. From the beginning, turn into number, ooh, got it. Turn into number of years gives them the solution of more money for years. Yeah, I mean, come on. Life insurance is income protection. Get their income, divided their life insurance by their income per year, and you come up with how many years of income protection that life insurance policy will provide. Does that make sense, gang? Any other questions? All right, man, I am way long, but I just master these power phrases and you will kill it, I promise you. All right, Diane, you unmuted.
I just wanted to thank you, Alex, for inviting me in on the call. This was awesome. I picked up some great points. And I think I need to do more with finding out why they have the insurance that they have. Because I've run into situations where I've talked to them. We feel comfortable. They've taken out a policy. They change jobs, and then they say, "Well, the company is giving me insurance," and I feel like I've gone through that deja vu, and I'm bewildered on how to handle that at that point.
Yeah, that is absolutely true. You were breaking up and barely hear you, but I think I got the gist of what you're saying. It is framing the solution as a solution to what they need, not all their other things that they already have. It can be a part of the solution. Okay, now look, we're not trying to sell them something they don't need. Okay, so don't get me wrong there. I'm not trying to hoodwink them into buying something they don't need. Okay, but 78% of the people you sit down with don't have enough life insurance. They really don't. And when you can look at it from the standpoint of income protection, then this will help them transition if it's a whole life, or help them cover the whole mortgage, right? And sometimes when people buy life insurance, they bought it a long time ago when their income was lower. You know, now their income's higher, that life insurance is going to barely cover a year or 2 years, right? So
Right.
yeah, okay, cool. All right, Diane,
Thank you.
you're welcome. Okay, cool.